Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as precise investment advice. Investing comes with risk. No matter how safe an investment sounds, there's risk involved. To read more about it, please see the description below. Rising or falling oil prices don't really affect midstream oil and gas companies like today's income pick, Genesis Energy LP, traded on New York Stock Exchange under symbol GEL. That's because upstream companies signed fee-based take or pay contracts to use their infrastructure. Case in point, the US oil and gas midstream market wasn't really all that affected by the pandemic. Even though demand for oil plunged, companies continued to drill. And all those hydrocarbons needed to be stored somewhere. Going forward, factors such as increasing pipeline network and record production and consumption will boost the demand for additional U.S. oil and gas midstream companies, especially over the next 5 years. From 2023 to 2028, U.S. oil and gas midstream market is projected to expand at a compounded annual growth of about 4.15%. John?
Yeah, on top of that, production cuts from OPEC will also create opportunities for U.S. production. Despite these OPEC cuts, production is expected to increase by 1.4 million barrels per day this year and by 1.7 million barrels per day in 2024. Of that 2024 total, 1.2 million barrels per day will come from non-OPEC countries, with production growth led in part by the U.S. and Canada.
And all of these positive growth dividers should help juice Genesis Energy LP bottom line, and of course, its high yield dividend and unit price over the coming years. So, John, tell us about Genesis Energy LP.
Well, Genesis Energy LP owns and operates, not surprisingly, midstream assets. They're actually located primarily in the Gulf Coast region of the U.S. and Wyoming and the actual Gulf of Mexico. Its infrastructure consists of 4 business segments. The offshore pipeline transportation includes more than 2,400 miles of pipeline and basin critical infrastructure that moves hydrocarbons produced central Gulf of Mexico to offshore in both Texas and Louisiana. It's a leading global producer and marketer of soda and sulfur, both of which have little to no substitutes and strong demand driven by global industrial production and the green energy transition. Through its marine transportation segment, the company owns and operates a fleet of 130 marine vessels that transports refined products, crude oil, and clean refined products along the Gulf Coast, East Coast, Great Lakes, and Western river systems. And finally, its offshore facilities and transportation portfolio consists of 450 miles of pipelines and terminals that primarily transport crude oil received from its offshore pipeline transportation assets downstream to refinery customers and other refinery-centric demand centers along the Gulf Coast.
I was reading that this company's net income jumped 58% and cash flow was up 51%. Explain what's happening. These financials look really solid to me.
Yeah, second quarter financial results were actually slightly ahead of the company's internal guidance expectations. For the second quarter ended June 20th, the company announced that net income attributable to Genesis increased 40% year over year to a little more than 49 million. Net income attributable to unit holders was up 58% at 26.4 million or 22 cents per share. Cash flow from operation activities was up 51% at 157 million, and EBITDA grew 34% to 183 million, while adjusted EBITDA slipped slightly to 197.9 million.
And how does the company's business outlook look?
Despite the solid results and industry tailwinds, Genesis actually lowered its full-year adjusted EBITDA guidance range to a range of 725 million to 745 million. That's down 5 to 6% below original guidance. Now, while that's less than originally anticipated, it's really important to remember that this year will still result in record annual adjusted EBITDA, record segment margin for its offshore pipeline transportation segment, and record contribution from the partnership soda ash business. Management says Genesis will also deliver sequential growth of approximately 8 to 10% over its normalized 2022 performance at the midpoint. Further out, it expects to report even better financial results in 2024, with continued strong results in 2025, and that comes on the heels of its 2 new deep water pipelines, Shenandoah and Salamanca, both coming online.
It's high yield payout.
In July, the partnership's board declared a quarterly distribution of 15 cents per unit, or 60 on an annual basis, for a yield of 6.39%. That, for context, more than double the current inflation rate of 3.1%. Now, keep in mind, Genesis is an oil and gas company, so its dividend can fluctuate. Back in March 2020, just as the pandemic was crushing the global economy, Genesis actually reduced its common distribution pretty significantly from 55 cents per unit to 15 cents per unit. At the time, though, management said that the reduction would save approximately $200 million per year, which it used or is using to accelerate its deleveraging plans, and that is reduce its outstanding debt without incurring any new debt, and thus, of course, strengthening its balance sheet. Now, keep in mind, the decision to reduce its dividend was not a result of any material deterioration in the company's performance or underlying business, but rather an astute proactive step in the then current environment. The company has held its quarterly distribution at 15 cents per share ever since. Again, the payout is safe. The company could safely raise it if it wanted to, with a robust outlook for 2024 and 2025, which includes cash flow of $200 million to $300 million. Chances are solid it will increase its dividend over the coming quarters.
And finally, how have GEL units been doing recently?
Well, Genesis Energy units haven't fully recovered from the pandemic. Their units are up 253% over their March 2020 pandemic lows. They still need to climb an additional 64% to get to where they were at the start of 2020. Wall Street, though, believes there are enough growth catalysts to propel Genesis stock to within striking distance over the coming quarters. Analysts have provided a 12-month low target of $11, median target of $13, and high estimate of $14 per unit.
All right, John, thank you so much for your analysis. Just to recap, a growing midstream company, Genesis Energy LP, has a big footprint in the US, especially across the South and the Gulf of Mexico. It has a strong balance sheet. It is expanding its operation with two major developments projected to come in 2024 and 2025. The partnership reported better than expected second quarter results, and while it lowered its full year adjusted EBITDA guidance, it's still expected to report adjusted EBITDA and sequential growth of approximately 8 to 10% over normalized 22 performance at the midpoint. Thanks to its strong cash generation, the company is able to provide its unit holder with reliable high dividends and recently announced a plan to repurchase 10% of its outstanding unit. That's it for today. We'll be back with another video soon. If you want to read what John writes on regular basis, you could head directly to www.incomeinvestors.com. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.